Imagine being able to put not just $7,000 into Roth each year, but $20,000, $30,000, even over $60,000. That's the power of the Mega Backdoor Roth. In today's video here on Mask Money, I'm going to break down exactly what it is, how it works with 401ks and 403bs, and how high income earners can use it to retire with millions of tax-free dollars. Welcome back to Mask Money, the channel where we talk about investing, personal finance, and building real financial freedom. If you're serious about creating wealth, make sure to subscribe and like this video so that more people can find it. First, let's recap. A Roth IRA lets your money grow and be withdrawn tax-free, but it has two big limits. One, your annual contributions are capped at $7,000 or $8,000 if you're above 50. High-income earners are generally phased out in 2025 at around $165,000 if you're single, or $246,000 if you're married filing jointly. That's why we use strategies like the backdoor Roth to get around the income limits. But even then, you're still capped at about $7,000 a year. Enter the Mega Backdoor Roth. The Mega Backdoor Roth is a strategy that lets you contribute tens of thousands of extra dollars into a Roth account each year by using your workplace retirement plan like a 401k or 403b. Here's the key. The IRS sets the total limits for 401k and 403b contributions much higher than just the $23,000 employee deferral in 2025. In fact, the combined limit for 2025 is actually $69,000 or $76,000 if you're 50 or above. And that limit includes your contributions, your employer's match, and any other after-tax contributions you make. Those after-tax contributions can then be converted to Roth, either inside of the plan or by rolling them into a Roth IRA. And that's the Mega Backdoor. So here's a step-by-step on how the process works. You would max out your regular 401k and 403b deferral up to the $23,000 or $30,500 if you're above the age of 50. Check if your plan allows for after-tax contributions. Not all do. This is the most important step because if they don't allow that, then you won't be able to do this within your plan. You would then make after-tax contributions in this separate section that is not pre-tax or Roth. There will be a third section called after-tax. You would then convert those after-tax contributions into a Roth. Some plans will actually let you roll them into a Roth IRA immediately, while others will let you do an in-plan conversion to keep it inside of your 403b or 401k, but then in the Roth section. Now, instead of just $7,000 a year, you could be moving $20,000, $30,000, or even more into the Roth space. Let's put this in perspective with an example. Say you're under 50 and you contribute the max $23,000 to your old 401k. Your employer then matches $6,000. That's $29,000. The IRS limit is $69,000. That means you can put up to another $40,000 in there in after-tax contributions, then immediately convert those after-tax contributions to Roth. Over 20 or 30 years, that could grow into millions of tax-free dollars. Now, this isn't available to everyone, and there are some rules you need to watch out for. One, not all plans allow for after-tax contributions. Some don't, and some allow them but won't let you roll them to Roth very easily. And timing matters. If your plan only allows yearly conversions, you could owe taxes if the earnings in that after-tax section go up before you convert to Roth. There is also the Pro-rata rule. Similar to the backdoor Roth, you need to watch out if you have any other pre-tax or after-tax balances, though it's usually less of an issue with 401ks. Paperwork. Always keep your records because the IRS will want to see just how much was after tax versus converted. So who is the Mega Backdoor Roth for? High income earners who have already maxed out their 401k or 403b, People who want to shovel more money into Roth accounts beyond that $7,000 a year IRA limit, professionals with strong cash flow like doctors, lawyers, or tech workers. If your plan supports it, it's one of the most powerful wealth building tools out there because the limits on this account are so much higher than a normal Roth IRA or a normal Roth or traditional 401k. To wrap it up, the Mega Backdoor Roth lets you go beyond the standard limits and pour tens of thousands of extra dollars into tax-free Roth accounts every year. The catch is that not every employer will allow it, so you need to check your plan first. This is Mask Money. If you found this helpful, hit the like button, subscribe, and let me know in the comments if your workplace plan allows these after-tax contributions. Thanks for watching, and I'll see you in the next video.